Welcome back, and thank you so much for joining me in today's video. If you guys follow the channel, I talk about how sales of new home construction have been absolutely surging, whereas sales of existing houses have been faltering, down by double digits. I found a report about about an hour ago, regarding the number of applications that people are submitting for loans to buy brand new houses. Absolutely skyrocketing. Night and day difference compared to applications in the resale market here. So I have a lot to share. And also I'm going to share how building material prices have fluctuated over the years. There's a new report regarding that. And also Lennar released a Q3 earnings report. And I'm going to share how their business has changed over the past 1 year here and what they're doing right now to actually increase sales. I have a lot to share in today's video. If you can tell, I had a lot of coffee, and of course, I'm actually really excited to share this video with you guys. So I first want to kind of provide some context regarding application numbers. These are mortgage application numbers for people looking to buy a house. As I reported to you guys, a day or two ago, this is based on the MBA's report. Their seasonally adjusted purchase index, which is a measure of applications, actually increased by only 1%. But compared to 1 year ago, it was down by 27%. We're seeing a lack of housing affordability, high rates, high home prices, and therefore we're seeing also a decrease of applications. In regards to applications for brand new houses, night and day difference. So for the month of August, this is from the MBA, just reported today, which is my birthday here. The MBA reported that for the month of August, applications for new home purchases increased a whopping 20.6% compared to 1 year ago. It also increased by 4% from July. So from the previous month, increased by 4%. That is crazy, right? Applications to buy brand new houses increasing by what? 21% versus a 27% decrease of total applications. So according to Joel Kahn, who's the MBA's chief economist, he stated the following here. There was strong purchase demand in August for newly constructed houses as existing for sale inventory, in other words, a low amount of existing houses for sale, remains low, with most homeowners locked into lower rates and unwilling to give up those rates. Despite the 30-year fixed rate averaging above 7% in the entire month of August, applications for new home purchase loans increased over the month and over the year. So even though rates are at 7% for about 2 months now, about a month and a half, applications have been absolutely surging here. He also added the share of applications using FHA loans. These are loans in which you can put down a minimum down payment of only 3.5%. These are type of loans that tend to be popular for first-time homebuyers. So it says here the FHA share of applications for new home purchases decreased slightly in August. However, though, it remains very close to survey highs, indicating that a larger share of first-time homebuyers is supporting new home sales. I'm also seeing that as well here in the Sacramento area where I live and work as a real estate agent with my team here. We have 3 clients right now under contract with a new home builder right now, and they're getting rates in the range of 5.5 to 6.5%. 2 of those buyers have rates around 5.5%, which is just absolutely insane because rates today are around 7.3%. That's one reason why we're seeing an increase of applications and, of course, sales, because builders right now are offering incentives such as rate buy downs, which is actually driving sales as well. It also says here their estimate of new home sales for the month of August showed a 4% increase compared to July. That would be the strongest sales pace in about 3 months at 702,000 units. So what the MBA does is they actually look at the amount of applications they're getting for new houses and actually kind of coming up with an estimate regarding how many home sales are we going to get for the entire month of August nationwide. And by the way, the U.S. Census Bureau will not report new home sale numbers until about a week from now. But according to the MBA, they are forecasting for a 4% increase on a month-over-month basis this August. Also, if you guys are curious, by each of the product type regarding these applications for new home purchases, about 65.8% are using conventional loans. Also, FHA made up about 23.8%. That's pretty high, right? 23.8% for people using a minimum down payment of 3.5%. RHS and USDA loans only made up about 0.2%, and VA loans was at 10.2%. The average loan size for new home purchases increased from $397,000 in July to $398,000 this August. Now, having said that, I also want to compare how new home construction sales compares on the resale market here. So for existing home sales, these are closed home sales, according to the National Association of Realtors, on our good Uncle Fred's website here, on a seasonally adjusted annualized basis here for the month of July, the most recent data we have from them, there was 4,070,000 existing home sales on an annualized basis. Compare this to 1 year ago, we were at 4.88 million. By my dumb math, that's a decrease of 17% in the number of existing home sales. Now, when comparing this to new home construction, though, it's actually just the opposite. The resale market going down, whereas new home construction of single-family houses have been increasing an increase of about 31%, going from a seasonally adjusted annualized number here at 543,000. Now it has surged to 714,000, an increase of 31% year over year. So quite the dichotomy we have in our U.S. housing market. Closed home sales decreasing by 17%, but during that same time frame, new home construction sales increasing by 31%. Here's something we also know as well, because this kind of provides some context regarding how home builders are doing right now and what they're doing right now to drive home sales. So they actually just announced today, which is September 14th, their third quarter earnings. I just found this to be fascinating here because new orders, these are contracts being signed between buyers and the home builder, Lennar here, increased by 37% compared to 1 year ago. That's the third quarter of 2022 compared to the third quarter this year. They're also sitting on a giant amount of cash and cash equivalents at $3.9 billion right now. And also, they don't have any borrowings against their revolving credit facility. So they have available to them $2.6 billion, but they have no outstanding borrowings on that credit facility, which makes sense because they have $3.9 billion in cash right now. According to Stuart Miller, who is the executive chairman and co-chief executive officer at Lennar here, he stated the following: the Fed continued to use tighter money supply and higher interest rates as tools to battle inflation. We all know this, while enabling continued economic growth. At the same time, short housing supply, absorbed by strong primary and pent-up demand, continued to define a strong sales environment. Home builders continue to use incentives such as rate buy-downs, and also which will limit housing affordability. So what he's basically saying here is that builders such as Lennar are offering a rate buy-downs, which means that instead of getting a 7.3% rate, maybe you're getting 6.5%. And that's actually improving affordability, which is increasing sales as well. And he also says here, despite an uptick in rates for the month of August, they were able to increase sales as well. So not only are home builders using incentives in order to increase sales, but also Lennar reported that their average home price also decreased as well. So they're decreasing prices, but also offering incentives as well. Their average sale price per home delivered was $448,000 in the third quarter of this year, compared to almost $500,000 1 year ago. So therefore, their average home price delivered was about $52,000 less than 12 months ago. They also reported that they were able to complete houses faster than 1 year ago. So it took about 32 days faster to deliver or to construct a house compared to 12 months ago. This was due to improving supply chain and labor market conditions as well. Now, here's something I found to be just kind of like mind-blowing here. They said the end of the quarter or the end of the third quarter this year with approximately 1,400 completed unsold houses. These are houses already built. They're ready for a home buyer to move in. I've been telling you guys that this is something we should track, because if completed houses that are unsold in which the builder is not able to sell those, that is a recipe for disaster. However, based on this right here, it appears that Lennar is really selling their houses and not sitting on a giant amount of surplus, or a giant surplus of completed houses as well. So for the entire company, only 1,400 completed houses that were unsold. That represents only one home per each of their community. They also reported revenue numbers as well, because those decrease. Revenues from home sales decreased by 2% in the third quarter compared to the third quarter of 2022. Revenues were lower primarily due to a 9% decrease in your average sale price of home deliveries. And lastly, I want to share this report with you guys as well, because building material prices have been relatively stable compared to years past. However, diesel fuel absolutely skyrocketed for the month of August. This is based on the latest PPI, or the Producer Price Index report that was actually just announced today, the 14th. It says here the price of level inputs, or the price of residential construction, actually increased by 0.1% in August. So building materials increased by only 0.1% in August, and also increased by 0.1% compared to 12 months ago. This is relatively stable compared to months past, because back in January, it was a 4.9% increase on a year-over-year basis. Now it's only a gain of 0.1%. Also, back in August of 2022 compared to August of 2021, we saw a gain of 14.7%. So this 0.1% increase over the past 12 months here is the smallest since June of 2016. Here's something that I actually emailed them about, because they say here that prices overall increased by 0.1% year over year, although their chart here says it's 0.2%. So whether it's 0.1% or 0.2%, I don't know if it really matters, because it's a small increase compared to 1 year ago. Something to keep in mind, though, is that, again, back in August, we saw a gain of 14.7%, a giant increase compared to the previous year. So even though that prices are stable, they're still up by 0.2 or 0.1% compared to August. So a small increase based on the previous giant increase we saw 1 year ago. So to me, what this really means is that prices are still high, but they're more or less stabilizing over the past few months now. In regards to gypsum building materials, this is more or less drywall. So the PPI for that actually decreased for the 5th consecutive month, falling by 0.4%. Prices have decreased by 0.9% over the past year, marking the first 12-month decrease since September 2020. Again, keep in mind here, prices have absolutely skyrocketed ever since the onset of COVID, which prices started to increase really back in November and December 2020. So even though prices have been relatively flat for about a year now, they're still way higher compared to pre-pandemic levels. For prices of steel mill products, that actually decreased by 0.5% for the month of August, but since climbing 12.4% between January and May this year, prices have decreased by 5.6%. Prices for softwood lumber decreased by 5.3% in August, the first monthly decrease in about 3 months. The index has fallen by more than half since reaching its all-time record high back in May of 2021. And here's a chart going back to January of 2020. As you can see, a huge volatility in prices. We saw peaks in the spring months of 2021, as well as the spring months of 2022, which, by the way, that we tend to see fluctuations based on demand. And obviously, demand tends to be high in the spring months and very low in the winter months. But having said that, the current levels right now are roughly on par with July of 2020. Let's also have a look at prices for ready-mix concrete, because that actually increased by 0.6% in August and also rose by 9.1% year over year. This year-over-year increase of 9.1% is actually the smallest since May of 2022. Something that's important to note here is that even though prices are only up by 9.1%, the smallest increase since May of 2022, we're still at very high levels though, just like a drywall. So an increase of 9.1%, the smallest since last May. But as you can see here, going back to January of 2021, each and every year saw an increase compared to the previous year, and a giant increase over the past several years now. And with that said, check out that link below if you guys want a real estate agent referral, or go to realestateteamfinder.com. I appreciate you guys watching today's video, of course, for supporting my YouTube channel as well. Hope you guys have an awesome day and look forward to seeing you on the next video.